With over 10,300 students trained in the past 3 years and multiple seven figures raked in from the financial market, this is the best YouTube channel where you can learn how to trade the financial market profitably. Hello, Jay is here, and in today's video I will show you how to pick the market bias for an entire week using one candlestick. Now, the purpose of this training is to further show the importance of market direction, because without having a proper market direction, you would at best be termed as gambling. So let's head over to my screen where I'll be sharing with you how to pick the direction for an entire week using a candlestick. And if you're just joining my channel, do well to leave a like and a follow so you'll be first to notify when we post new videos. All right, so the first things first, we have always said that structure is king. Structure is king. So we have lots of videos here where we talk about market structure. So what you want to do is to head over to a chart, any chart you want to trade, and look at it from the weekly time frame, and you want to predict the close of the next week's candle. All right, and now how to do that? You must first of all have a proper understanding of market structure. You must also have a proper understanding of equilibrium, premium, and discount. In our last video we did talk about that, although I will still speak about equilibrium, premium, and discount. Then very importantly, you must also have an understanding of fair value gap and liquidity. And I should say this right here, that the market moves upwards or downwards to do two things, either of these two things, no more. It's either the market is going up or coming down to fill a fair value gap, or it is going up or coming down to take out a liquidity. All right, and for sake of those who might be new to our channel, just to make it very clear, fair value gap simply refers to the space or spaces that exist between candlesticks. Fair value gap is the space that exists between candlesticks. So very quickly, a candlestick should normally be especially when you're dealing with a series of 3 candles. So let me use an example to show right here. By the way, we have a full video in this channel where we talk about all of these things exclusively. All right, now look at this candle right here. I will mark the low of this green candle, extend it in time, and then mark, of course, this other candle at the bottom. The high of it neatly overlaps or interacts with the low of that green candle. So in this case, you call it a balanced price action. All right, so there is nothing, there is no space there. This is how price action ought to behave. Every candle ought to interact with the previous candle. When that does not happen, then you can say fair value gap is created. And for example, you can see an example here, very quick example. You can see the high of this candle, right? Okay, let me get another two right there. This is for those who are basically in this. So the high of this green candle, right, extend a line above in front of it, it's there. Then the black candle have its low right there. Good. Now this space in between the high of this green candle and the low of this black candle, when viewed with respect to this last green candle, this massive bull candle, that is your fair value gap. And fair value gaps happens in the market because of many times a lot of orders in the market. Now usually price will come back to fill the fair value gap. So fair value gaps, they act like magnets to price. All right, and by when we say fill, we do not mean that price will come entirely to close it. Many times price can just come to the tip, like in this example, it returned back after weeks. All right, weeks later, just to the top of this candle right there. So if I extend this further, you will see that this black candle right here interacted with this high. So, and when price got here on this particular week, this 2023 June, right, the market maker will open their spread to rebalance this thing. So it's as good as being balanced. And you can see what happened. Price filled the fair value gap. So it came back to fill this fair value gap and returned back. all right, and return back. Look at another fair value gap right here. You can see this black candle, the high of this black candle ends there, so extend in time like this, and then after this massive bull or green candle, it has another candle after it. The other green candle's low is there. So price left all this area as a fair value gap for quite some time, and then as of now we can see price had just filled up the fair value gap right here. All right, so you must have a good understanding of fair value gap, of liquidity, of equilibrium, premium and discount, all of those things in your mind, and finally structure being king. So it has to always be market structure. And I do tell traders, if you want to be really profitable, forget all the many jargons you see out there, just soak yourself in understanding market structure. And I have an exclusive video I will leave in this link, so you can go watch that for yourself. Now the objective again for this class is for you to predict with one single candle the direction for the next week, for the next 5 days. And how you do that is by predicting the next candle which the weekly time frame will expand into, whether it will be bullish or bearish. All right, so currently this is Euro AUD. You can apply this in any chart, Euro AUD. So when I come to this chart, what are the first things that I see? What are the first things that you see? We can see obviously price from a bearish momentum has changed to become bullish. So you can see a bullish momentum. Structure is king. How is it bullish? Higher highs, higher lows. Very simple, very clear. Now let me zoom all right in. Now also you understand already that in a bullish market you want to buy at discount and sell at premium. So for this price range, which I can call low and all the way to this high, this is an entire price range. And how do we know it's bullish? Because it's broke major swing structure right there, right? So we are bullish. So for this price range that is before us, we are obviously bullish, but you cannot buy anywhere. Remember, you must understand equilibrium, premium and discount. In a bullish market, you look for price to come to discount and you buy. In a bearish market, you look for price to go to premium and you sell. Don't forget that. And how do you get that? Simple. Your Fibonacci tool. I'll pick my Fibonacci tool and I've told you how to set it. You set your Fibonacci tool, remove all under numbers, leave only 0, 0.5 and 1. So I put my Fibonacci tool from this low of this swing all the way to that high right there. And now what that leaves with us is that the midpoint right there is our equilibrium. So you're going to mark it out, equilibrium. So you want to see price, because you are bullish, you want to see price sell back into discount and then buy. So I'm going to take out this Fib 2. Now this already gives me a frame. All right, the frame is that price should sell into this area and buy. So what does that tell me? That tells me this is the weekly time frame. Pay attention. This is the weekly time frame. From simple structure already, though we are bullish, but structure is telling me that price should sell into the discount. So what does that tell me? That tells me automatically I'm expecting, or I should expect, bearish candle, bearish close of candle into all of this area. Now it doesn't matter whether it's going to be one or several candles. All I need to know is that the next week candle will be bearish, and once I have that expectation, you put it in your notepad. I expect bearish close in the following week as at the time of this recording. So what does that, how does that help? I'm going to give you a case study right now, but how does that help us? That helps us in that when you face the new market week, you already have a bearish expectation, and in a bearish market expectation, you want to sell from the highs. You want to look for sales from the highs, and we normally have two ways we look for that. If you're new to our channel, you're welcome to learn about our liquidity entry, which, by the way, selling from the highs, you want to wait for price to do something like this, break of structure to the downside, then you wait for price to rally back to the upside, take out this high, and you sell from that one. Either price gives you that, or you wait for a double break of structure, 2 times 1. All right, just a moment. You want to wait for price to break structure 1, 2 times, and then come back, sell from that high. All right, so all throughout this week, or I will be waiting for these expectation in either the 1 hour time frame or the 4 hour time frame. Very easy, very simple. So let's assimilate a little bit and see how this can actually help us become a better trader. All right, remember again, the way we did this one was simply by understanding structure, premium, and discount. Now again, if I want to be very precise, because we say price will move up or down to do two things, either to fill a fair value gap or to take out a liquidity. Now in this example, we can clearly see that on its way, we expect it to come down. This low here is a liquidity point, so we expect price to take this low. So this could be my first objective for the new week for this Euro AUD. I don't know when you're watching this from, but this could be my first objective. And also by the upside, we can see every candle is clearly closed, right? There is no fair value gap at the top. All right, there are no fair value gaps at the top from this price swing. Break of structure here, this returned back to fill up that gap, returned back, this one filled up this one. That way this went as high as taking out the previous week's high. Yeah, so this is typically like your sweep of liquidity, right? Let's zoom more so you can see. So 2 weeks ago, we had price rallied up, take out this high. So that's your sweep of liquidity and rejected. So we're expecting price, this high should now be protected, right? If you don't understand that, again, we have a full video that explains protected highs, weak highs, strong highs, right? Now, that's already protected high. So we expect price to play inside this range and then sell off. So the new week, basically what I'm expecting this new week for this pair is price to play inside this range. Maybe take out the last week's high right there and then close bearish. Now this should be my expectation. Now all I need to do is to go to smaller time frame that is convenient for me, say the 4 hours time frame, and wait for my setup. All right, so this is the 4 hour time frame. Having understood that I am bearish or I expect a downside movement all the way to this liquidity low, then you now look for an entry. And by just by looking at this is that sweep I told you about, and then you have all of this. So price can actually take out or should take out this high, right? And this one is also a suspect to be taken out, but again, we have a very good order block, or you can call it supply right there. So for a smaller time frame, for a swinger, you can wait for price to get all the way there and boom, you sell off. All right, now in a subsequent video, we are going to assimilate real-time data. I will show you how to gather enough data that will support your thesis if what you know is working or not. Well, if you're learning a lot already, you can leave a like and a follow as well, so more persons can see and know this video. So finally, let's test what we have just learned. All right, let's put to test what we have just learned. Understanding market bias with one or several candles from the weekly time frame. And once you get it right, every other you can be rest assured that you would follow through for the rest of that week. Now let's cut off just a piece of the chart price action right there, and let's see something together. Now obviously, if I was looking at price action on this particular day, I can say we have changed to bullishness because this major high has been taken out. All right, but that's not our concern. We are again starting from structure because structure is king. And then if you are seeing this price action, what would you expect? Now, there are certain price and pair or times where it will not be very clear to you. I suggest when you come to the weekly time frame and it's not very clear to you what price we would want to do next, you stay off that pair and look at another one. Now, I can see this one already, and price had created a low right here. All right, this low, right, like a liquidity point, and then we are obviously bullish because that have been taken out. So this is a long-term expectation. Now, based on experience and understanding, before price will move in its intended direction, I expect either liquidity to be taken out from the opposite direction or a fair value gap to be filled from the opposite direction. Do you get that? So if price is supposed to be bullish, expect that it will take liquidity from the bearish or the sell side, or it will fill a fair value gap at the bearish part of the market. Once that is achieved, then to have enough momentum to continue in its bullish run. Now, if I was looking at this chart at the moment with that in mind, I would actually expect the downside to be taken out, and that would mean bearish momentum or bearish bias for that week. And then once this is taken out, I will not start expecting bullish movement. Does that make sense to you? So let's play price and see. All right, clearly you see it came down, right, but didn't take out this low. But once I see this rejection, you can see already we are already pushing up. And if you go to the smaller time frame, say 4 hours, 1 hour, you will see a lot of opportunities from when price start pushing all the way to the upside. Let's play a little bit more and see if we can assimilate some. Now, if I was on this chart and I have seen this price have taken this high, my expectation is that price have taken out a liquidity to the upside, confirmation that we are bullish, but it has to sell back into some discount level and then continue buying, especially understanding that that is a fair value gap, right, that should be filled, and there is liquidity or order block at the downside. All right, now in our next video, I'm going to show you again how to gather enough data. Now you can see clearly price sold into discount. You are bullish, and then all the way takes out this liquidity. Good. So from this level, from this area, as I see this rejection, right, you can start expecting bearish momentum. Now imagine you were here and expected price to sell into discount. Wouldn't you be expecting only lower price and make money from these 2 weeks of pure drop? Now it's retraced and came back to take out this liquidity I mentioned. Now once this one is taken out already, all right, and you have this push up, I can now expect with almost every degree of certainty, you can be a swinger from this. You can now expect that price will, no matter how long it takes around this level, it should go up and take out that high. And I will be stopping here, so I don't want this video to be so long. All right, you can see the movement. You can see 1, 2, 3, 4 weeks of push. 4 weeks, 1, 2, 3, 4, a month of bullish movement. Till it, once it takes this liquidity out, you can expect another pullback to say discount. Then that means you can expect bearish movement, and then so you see how all of these things correlate. Now I will suggest that you get TradingView Premium and do tasks like this to train your eyes to seeing how this works. Now I can see this area. I could expect price to even pull back and do something around this high before it continues. So I could expect bearish movement. It has come here, and I could expect some form of bullish movement once it takes out that liquidity here, this liquidity here. Now it takes it out there. Now you expect all of this movement down. All right, takes it out. I should expect, no matter how long it takes, it should take out that high. Boom. So imagine you understood, for example, that you were here, you saw this liquidity grab, and then you already expect bullish movement from where it is to that high. This could have been 1, 2, 3, 4, 5, up to 7 weeks of buys. All right, but you just need one candle, but I'm showing you several. So 2 videos that will come in more later in this channel. One, how to pick 5 to 700 pips move, and another, how to get enough data from the marketplace. If this showed you 1 or 2 and you are quite excited to learn more, please do well to leave a like, a follow, share this to someone that knows, that needs to learn about this. And if you want to know more about this method, please stay close to our channel. We have lots of videos here that will educate you on how to trade the financial market profitably. All right, let's go. I'll see you on the next video. I'm signing out.